And now, without further delay, let's begin today's event, sponsored by Easy Lease, LeaseAccelerator's GASB lease accounting solution, and hosted by Accounting Today.
Yeah, so this is Andrew, and what we're going to do today is start with a polling question and then follow it up with just a high-level overview of what GASB 87 is, because it is relatively new to so many of you. But again, our objective today is to elaborate on exactly what it is. The standard has been around for some time. We're focused on the data collection element of it. And to do that, we're going to talk, how can we ensure the completeness and accuracy of what we're gathering? Start at that high level and then go through exactly what we need to look for, specifically what data elements we need to gather, and discuss and emphasize the fact that we need an ongoing sustainable process in order to ensure compliance. So the three things I'd like you to remember out of this is timing is essential first. You may need to do a look back over a year or two and be cognizant of when exactly you're going to start being subject to it, if you're a 630 year end or a 930 year end. Second, it's completeness, right? We're going to need to make sure we're gathering all of our leases, whether they be lessee, lessor, embedded leases, real estate leases, equipment leases, and so forth. And third, it's the fact that this is going to be something that we're going to need to sustain. This isn't just a one-time adoption event, but something that a new process we're going to have to set up in perpetuity. So we're also going to have three case studies. We're going to talk about a municipality, a healthcare organization, and a university. Please don't wait for the Q&A section at the end to start submitting your questions. We love hearing from you, and we'll get to as many of them as we can as we go through this. So let's go ahead and move to our first polling question to kick things off.
All right. But we're asking, which leasing role does your organization have? Are you a lessee only? Are you a lessor only? Or are you a mix of lessee and lessor, or you're not sure? Well over half, just over half, I should say, have a mix of lessee and lessor. Very small number lessor only. About a third say lessee only, and then a small percentage are unsure. Gentlemen, does these numbers make sense to you? Are they what you would expect, or what you think you see in the general universe?
They are. I mean, we're a GASB organization. And so we're expecting to see a mix. Empirically, we don't do as many projects that are lessor only, but we've certainly done them. And I completely understand if some of you aren't sure. If you're just beginning your process right now, you may not be completely certain as to, how much or if any sublease or lessor situation you may have, or the other way around if you lease anything as a lessee. I don't know, Tim, any feedback?
No, I think you hit it there. I would expect that, a majority of these, as we see by 51%, probably have some mix. And so this is pretty much in line with what I would expect. Great. Thanks, Dan. And I think in order to have a good, fruitful discussion today, I think it's important for us to kind of set the table on exactly what GASB 87 is. And I know it's been out there for a while and been deferred a few times, but unfortunately, I think we're reaching the end of the deferrals. And as you can see there, for those entities that have fiscal years beginning after the 15th of this month, they are now required to report under GASB 87. And with that, there will be the requirement to now place a liability and or an asset on your books associated with the present value of those future lease payments and or receipts of future lease income to basically represent the value of your future lease portfolio on the balance sheet. The challenge with that are numerous for many organizations. First of all, there is a required full retrospective adoption, which means that for all of the financial statements prepared, whether it be comparative, those previous year's financial statements will need to be restated for the impact of GASB 87. As Andrew alluded to, there's sustained compliance written all over the standard that is very much a challenge for many organizations. It's not a one-time event. This is something that you're going to have to report under for perpetuity, and therefore, understanding the impact of this not only from an accounting perspective, but also from just an operational perspective will be key in maintaining that sustained compliance. As we're talking about today, from a data collection perspective, there's a number of data challenges, and we'll get into these throughout the discussion, but just keep in mind there's a number of different data sources and data elements that will be required in order to ultimately get to the accounting that you need. And as I alluded to, this will ultimately have a very broad impact with your organization, usually involving not only finance and accounting, but procurement groups, land management groups, real estate offices, perhaps even IT and treasury may be involved. And so understanding that there's a numerous, plethora of stakeholders ultimately that will be a part of this going forward, making sure those people are aware that these changes are coming and then actually involving them in a lot of the pre-planning that goes with the adoption will go a long way. So as it relates to the initial population of leases, what does an organization need to collect in order to meet that initial compliance and retrospective disclosure requirements? What we look at in kind of identifying that initial lease population is ultimately we're trying to strive towards a complete and accurate lease population. I think the first question that your auditors will ask when you come in and they're looking at your adoption will be, how are you sure that you captured everything? And unfortunately, they just will not take because I said so as an answer. They will require you to have performed some type of methodology to derive ultimately to your conclusion. And so we typically see two avenues that we focus on. First is making sure that leases that have been identified are accurate. And by identified leases, I mean these are contracts that typically say lease or rent on them. Obviously a little bit more easier to spot in your organization, but it does require you to go through what we would consider to be audit procedures to verify the completeness of your listing of leases. And so that typically involves some type of data analytics within the GL to look at, your expense categories around lease and rent expense and verify that, that all of the major transactions that are hitting there on a monthly basis that you've looked at and determined that there is a retrospective lease on your lease listing associated with it. Again, this is probably the easier of the group to identify. Again, these are contracts that say rent and lease on them. But then there's this other category of unidentified leases, and I'd like to call these the embedded lease population, where the contract does not say rent or lease typically on them anywhere at all, but within the construct of the contract, there is an asset that is being provided to the organization that does meet the criteria for GASB 87. So with this part of the population, this is more of an art than it is a science in identifying these transactions. It usually involves some education and training of relevant purchasing and other organizational personnel that are involved in the procurement of assets for the organization or the procurement of services. And so we typically see those organizations undertaking a brief training exercise to ensure that they understand what is an embedded lease, what are some classic examples that they probably are used to seeing that they probably didn't know was an embedded lease. Classic examples such as the coffee machine in the break room, where perhaps you're paying for the coffee on a weekly basis, but you're not being charged for the machine itself. By taking the procurement groups and in some cases the IT organizations through some of these rudimentary examples, we then begin, asking them some more pertinent organizational questions as it relates to other areas that may perhaps be an area of exposure to these types of embedded leases. You can sometimes couple this training exercise and this kind of discovery exercise with procurement with some data analytics on your GL. Again, looking at payments that are meeting certain criteria such that they are, the same payment month after month to the same vendor for the same amount. Those could potentially look like lease or some type of routine contract that might have an embedded lease component to it. So again, I guess the overarching principle here is that, the identified leases are pretty straightforward and pretty easy to get at. It does require you to do some audit procedures on your GL. Most time is spent in identifying those contracts that have embedded asset or lease components that don't say lease or rent anywhere on them. And so that is more of an art than a science. And I think the expectation from a third-party auditor is just that that you have developed a methodology for obtaining those, and that you've applied it consistently. That's what they're looking at there. And then at the end of the day, because this is something that the external auditors are extremely interested in, making sure that this is fully documented and in such a case that it could be reperformed by an external auditor is key to, kind of building that argument that you have everything. So keeping files of the contracts you reviewed, creating, just simple audit work papers to support the analysis that you did will go a long way in proving to your auditors ultimately that you have captured that accurate and lease population. So, Andrew, maybe you could take us through a state and local case study?
Yeah, definitely. Just to react to some of what you're saying, you and I have both been in those rooms where they say, well, no, I don't think we're talking about a lease. We just rent that floor in that building. That's because, sometimes you're talking to folks who haven't read the standards or aren't accountants and so forth. But yeah, let's start our first case study, which is a municipal government. And they're not an early adopter. They decided to adopt when required. They explored outsourcing this process to their trusted advisor. They thought about doing it in Excel and getting software, and they got started before finalizing that decision. So leasing there was done by multiple departments, and as part of that project, they had to centralize their leasing process. The last time I checked in with them, they were almost done with building that sustainable process. They were just dealing with some edge cases and additional training. So let's talk through kind of their portfolio, how they collected the data, the time frames that they had, and how they've hit those challenges and the lessons learned. So they have about 150 lease contracts that they found at the end of it all, with 210 leased assets underneath those. So that's an important point. They're going to have to be accounting for 210 assets per their interpretation of the standard, even though they have 150 contracts, because sometimes they have to do it at the asset level. They have an airport, and the reason I bring that up is because they lease out hangars, so they're both a lessor and a lessee. So in that case, it was straightforward. All their lessor leases were in one place, but the equipment and other lessee leases were housed across multiple departments. So to go and reach out to a number of folks, some of them they had never talked to before, and had to gather information from them. So they gathered as much as they could by just reaching out to those departments, as they said, and they also reviewed their recurring payments to try to identify things that could also be potential leases, and they found additional items using that methodology. That's one key takeaway from this as well, is to review those recurring payments. So they're a 6/30 year-end calendar. So they have to adopt this by 6/30/2022 with a one-year look back. So effectively, it's really 6/30/2021. But again, only 1 year look back, unlike some organizations which do two. Their first goal was a rough calculation before the end of 2020. They just wanted to know where they stood. And their goal was to gather all of their data and abstract their leases by February of 2021, which they achieved. The challenges they faced, they said it was difficult to know what to look for and kind of where to look. So they didn't have a detailed list of all the elements, and that's something that we're going to get into, that you really ought to have from every single lease. Some leases were missing amendments, so they would reach out, they'd get something from somebody, but it wasn't up to date. There had been amendments that had taken place, so they had to go back out. So they said that was frustrating, they have to keep doing that back and forth. And the broad challenge they found is it was difficult to get other departments to get them the data that they need and care about accounting. I'm sure you can empathize with this, right? Because you're trying to get other folks maybe you haven't talked to before to get you information that doesn't necessarily make sense to them while you're asking this at all. So the results, and to wrap all of this up, one thing that they said was they wish they had started earlier, even though they started well before the date, kind of the quote-unquote deadline date. They wish they also had picked the methodology that they would go with before going into the data collection and abstraction process. So they had decided that, okay, they're going to do it in Excel, and this is exactly what they'll need, or they had decided, okay, we're going to outsource, and this is what that organization is going to need, or the software and the list of the fields that the software needs. The last thing out of this particular case study was interesting is the estimate that they came up with last year was actually quite close. Most organizations we work with lease more than they think they do. Usually the count of leases is low at first, and then they find more and more. But their estimate was actually quite accurate, even though they found additional leases that weren't part of the initial estimate. I mean, Tim, how does this compare to the things that you've seen?
Yeah, I think it's pretty spot on with what we've seen, especially with the challenges that were identified. I think, again, one of the aspects of the standard that a lot of people don't necessarily think about, ahead of getting into data collection is the concept of materiality, and they identify thousands and thousands of leases within your organization. But when you actually go through the scoping exercise to determine what is actually material to the organization that needs to be included in this GASB 87 accounting, then you could see the numbers shrink drastically from that number. So, if you've gone out and started collecting all of that data before a scoping exercise, then you could potentially have spent a lot of time gathering data that you don't need. So I think it's important to get an understanding of what's out there, but don't jump the gun. I know everybody wants to get to the end zone as quick as possible, but there is a rigor that you need to go through that will ultimately save you time in the long run.
All right, here we go. Where are you in your adoption process? Have you not started? Are you starting to gather data? Are you looking for a partner advisory firm? Are you looking for a software solution? Have you started your internal project, or have you already adopted? And let's see where people are in their adoption process. So kind of scattered all along, but you've got a good third, just over a third, saying they're starting to gather data. That's the most common one. Second most common would be that they haven't started, somewhere between 25 and 30%, and then a smaller mix of all the others. But almost a fifth say started their internal project, and about 10% say they've already adopted. Is this spread what you gentlemen would expect? Is this sort of where people are, generally speaking, sort of all over the map, but mostly still at the beginning stages?
The people we meet are in all kinds of phases, and naturally, some of you may not be working with any or looking for any advisory firms or software because you only have one or two leases, and you're just going to do this in Excel. So no worries if some of these don't apply to you. And I'm excited to hear that some of you have already adopted. I'm almost thrilled to hear, because there's nothing better than doing this as early as possible, so you can adjust and recalibrate and so forth as you're going through it. Tim, if there's anything else you want to add, I'd love to hear. I think,
I appreciate that, Andrew. I think the one feedback that I've heard from a lot of our clients is that, this isn't necessarily, we don't have to have it done until the end of the first year. That's when our auditors are going to look at it. I think that, in theory, that is correct from an audit standpoint, but when you look at the standard and you realize that all of the entries are basically transactional on a month-by-month basis, on a lease-by-lease basis, trying to accumulate all of those entries and book them as just one time at the end of the year without doing kind of formal month-to-month reconciliations could be an extreme challenge for that first year. So a lot of our clients, even though it will not necessarily be audited until the end of the year, we encourage everybody to move as fast as possible, especially if they've already gone past their true adoption date, just so that they don't have as much clutter to get through when they ultimately are ready to book everything and get it into the system. So again, just kind of realizing this is a lot of effort that needs to be done, and waiting until the end to do it. We saw a lot of the public companies do this with the FASB lease adoption. They waited till the end, and a lot of them missed their deadline, just simply because they had so much to do. So again, I would just say start sooner rather than later. I was just going to say, I think our next area is now to talk about what are the key data elements. We've talked about, what is the goal ultimately of the data collection process. Now let's kind of get down to the key data elements and how those ultimately play in our data collection plan. And if we look at the key data elements in general, again, none of these are rocket science for the most part. But I think when you start looking at platforms to deploy to handle your GASB 87, there's a lot of additional fields that ultimately the system will require. Plus, every organization is a little bit different as it relates to how they want to leverage the platform. Some organizations may be looking at just pure GASB 87 accounting. Some of them may want to also use it to do some of the real estate administration, so to remind them when leases are coming due or when there are exercise windows that they need to be cognizant of in renewing leases, et cetera. So on average, what we typically see is that on the real estate side, there's anywhere from 60 to 100 critical data fields per lease that have to be captured in order to ultimately build out a complete record in the lease accounting platform. On the equipment side, although not as numerous, there still are 25 to 40 critical data fields per lease. And those can range from, as you can see on the screen, start and end dates, payments, options, escalation things, all the way down to ultimately the very specific items like general ledger account codes and cost centers and entities that have to be added to every single lease so that ultimately when you get the data out of the system, you can book it to the appropriate cost centers and entities on the backside of this. So when you're going through this exercise, there's a lot of data coming from the leases, a lot of data coming from finance and accounting. Ultimately, all needs to be consolidated in one formal, what we call upload template, to populate into your GASB 87 solution. So when you start looking at the number of fields and the number of leases you have, the hours can incrementally add up extremely fast. Again, going back to those key data fields, and if you think that on average it takes about 2 hours, an hour and a half to 2 hours to complete an equipment lease, and anywhere up to 3 hours for a real estate lease, for a very small portfolio of 100 leases, you're looking at approximately 300 hours of work just to populate the upload templates to get them into the system. This does not take into account any time that you have to do to perform a secondary iterative review of the data collection. And I'll talk about that at a later date. So, when you start looking and getting into the hundreds of leases and even thousands of leases, the number of man hours that it will take to ultimately get the data into a usable form by the accounting platform is astronomical. And if you're looking at a short, say, 3 to 4 month timetable to implement, that's a lot of time and a lot of resource commitment in a very short window that has to be done in order to meet all of the deadlines and to not take a 4-month project and have it blow up to an 8-month to a 12-month project. So, when we think about the challenges of data collection in an overall engagement, this is probably where most engagements fail. Not necessarily in getting done and complete, but it's ultimately in meeting deadlines. They're typically required to be done in a very short period of time, and it's extremely time intensive. So, when you get to that component of estimating how much time it's going to take for you to abstract your data and get it ready, make sure you have fully calculated that out and that you have enough resources internally that can meet that hours requirement to get this done in the amount of time that your project has it to be done in. The other complexity that will add, even more headaches to this is the fact that while you're doing this exercise, the data is changing underneath you. So it's kind of like trying to nail Jell-O. You're getting data in a template, and at the same time, it is being changed by either amendments or new leases or changes that are occurring on a day-to-day basis. So not only will you have your initial data kind of abstraction and collection exercise, you will most likely have a second one to be performed right before go live to pick up all the incremental change that has occurred while you are actually doing this exercise. So as you can see, there's a lot of moving pieces, a lot of time commitment that's associated with this that I think is critical. Andrew, anything to say on that before we hop into the education case study?
No, I think you bring up an excellent point of the final review before you go live, because the data is moving, right? Like new leases could have been written since we began. Changes could have happened, so that a review again, especially because you have other things to deal with than GASB 87. So this isn't going to be just a full-time thing that you do all the time. So I like that end capture and also the overall thing to punctuate is knowing exactly what we look for, the precise fields to look for as outlined on that one slide before we begin the project. And exactly what we need to look for from every kind of lease really leads to successful deployment.
And so to kind of illustrate this, I thought it would be good to take us through an educational case study. This was a project that we performed for a statewide university system, and a very, very large portfolio. I think they had over 500 real estate leases. Their equipment size of their portfolio was undetermined. That was something that had never been captured for the university system, just because of the size of their real estate portfolio was so large that they basically felt that in the past in their disclosures, they didn't necessarily feel like the equipment was material. So obviously a large set of data, a large number of details that needed to be gathered on those real estate leases. And ultimately, when we looked at the data collection piece, there was a couple of things that we looked at. Number one was, we had a large data set that we had to gather, but we identified that they had an existing real estate office that they were using another platform to do all of their real estate administration on. So rather than read all of the real estate contracts, our initial population of the data came as an extract from their real estate administration platform. So we took all the data that was in there and we used that to the best that we could to do all of our initial population. We also then had to button that up with some additional validation work on the back end to basically validate that the data coming from the real estate administration system agreed to the actual physical contract. So rather than read 500 real estate leases, we used the data extract, and then we did a sampled validation exercise prior to loading the data to trace a certain number of those data elements back to the original contract. So that kind of met the accuracy assertion. One other unique technique that we deployed was we were able to leverage some grad students at the university to do a lot of this work as part of the data collection effort. Again, it was very cost efficient to the university system to engage them to do a lot of this data. They were supervised by our data experts on our side. They were also trained, but it did give us the bandwidth that was required to get this done in the short deadline that we have. Now, from a challenge perspective, the challenges we encountered were, the real estate administration system, while it contained a lot of data, a lot of the data records were not complete from what we would needed from an accounting perspective. So we did have to fill in quite a few holes in that data extract, and a lot of the supporting contracts and amendments and everything to that effect were not necessarily housed in that platform. And so in order to do the validation exercise or to fill in missing holes, we had to touch some of those contracts more than what we wanted to. But again, I think the time saved by leveraging an existing data source as well as using the grad students, made that an economical approach that gave us the bandwidth that we needed. Ultimately, we were able to get all the data collection done, validated on time in order to meet the implementation timetable. They were able to, they implemented their GASB 87 solution and have that set up, and they're using that for their ongoing maintenance of their lease database, such that when they do reach the milestone of September 30th this year, they can simply turn the switch and they will be in GASB 87. So a good example of being somewhat thinking outside the box to achieve the project goals, and also, thinking about, existing data sources and leveraging to the best of their ability. Andrew, anything jump out in that you want to talk about?
No, I know we're talking about GASB 87, but there have been people who have a sustainable process for lease accounting for 10 years, 15 years. because it was too much of a burden from an administrative standpoint. So I want to let you know that the technology and the experts have been around for a while. It's just that now everyone has to do it, or just about every single organization has to do it. That's the only thing I thought of. Thanks, Tim.
All right, thank you. Here we go. How many fiscal periods are you required to disclose in your organization's annual financial statements? One, and let's take a look at our audience. Just about 2/5 say one fiscal period, just slightly edging out just over 2/3 who say 2 fiscal periods, and then about 1/5 who are unsure. Is there a common answer for this, Andrew? Is there a standard thing, or is this a mix what we'd expect?
It's what I expect. Most folks just need to disclose back one period. The reason we ask this is because of look back. If you're in the 2-period category, GASB 87 will need to redo starting. Let's say you're a 9/30 year end. We can always pick on 6/30 year end. If you're a 9/30 year end, starting 9/30/2020, and then 2 years until you fully switch over on 9/30/2022. And it's okay if some of you don't know. Just be cognizant of the fact that this really can't wait until 2022.
And I would add to that, Andrew, that I think, if you look at the face of the financial statements of your organization, if you're presenting a single period, then you've only got to do that one period. If you're presenting comparative, then you've got to do the 2 periods. If you're presenting 3 periods, then you've got to present 3 periods. So it's basically, defined by what you present in your financial statements. There is typically some lease-related information in the MD&A, and that we have concluded, or the GASB's concluded, does not have to be restated. It is purely a financial statement restatement, so it's defined by the number of periods in your financial statement presentation. Thanks, Dan. We'll hop through this last piece because I know that we've talked about it quite a bit. Now, let's talk about this iterative process of actually pulling the data in. And I know I kind of blew through it previously, but now it's kind of laid out here in a step-by-step function. As everybody can alludes to, when they think about data collection to begin with, they kind of start with that first part, which is I just need to find everything, right? Where is it all located at? And that is extremely important ultimately in this exercise. But as you can see, there's a number of additional steps even beyond that are just as critical to this exercise. In step 2, what we're trying to do now is, as I alluded to in that last example, there may be alternative ways to getting to the data that you need that's more economical and more efficient. So taking the time to actually understand where your data sources are, if it's PDF contracts, if it's in a spreadsheet or a real estate administration system. We've even had some clients where we've actually been able to leverage vendors that maybe are managing a significant number of assets for us under lease. We can sometimes get extractions from them to speed up the process. But the goal here is to develop that collection plan that's the most cost effective and to get to that initial data extraction exercise. In step 3, you're basically, executing on that plan. And so you're out there pulling everything together, getting all of those data elements that are identified into the upload templates, and making sure that those records are complete in the upload template. Now, the 4th step is the data validation and exercise, and this is something that the external auditors will expect that you've done to meet the accuracy assertion with the standard. And essentially, this is a sampled approach where you're taking some of the key data elements that were gathered, and it's usually about 8 to 10 data fields that are critical to the financial accounting under GASB 87, and they will want to see that you have, validated all of that information in the upload templates back to the original contract. We typically see this as another area where, building out an audit work paper and actually, documenting the validation work goes a long way to meeting the auditor requirements here and substantiating that. So essentially what you're going to do is just perform those validations, create a reperformable audit work paper to show what you did, and then ultimately at that point, you are now ready for step 5, which is uploading and validating the data in the system. So at some point, you will load all of the data in to production, and then you'll have to reconcile that everything that you expected to be in the system actually made it into the system. So that piece of the puzzle is, again, sometimes missed at the very end, but make sure that you're ultimately validating that that upload process was complete also. So to illustrate this, I thought we'd take a minute to talk through a healthcare case study. Again, very similar to the education case study, but they have some additional, I'd say, challenges that maybe traditional organizations don't have. In this case, this was a healthcare organization that ultimately, they had standalone reporting requirements, but they ultimately reported up through a county CAFR. So they had to ultimately, their financial statements had to be consolidated in at a higher level. And so within healthcare, there's a couple of areas that are extremely challenging that you traditionally don't see in other organizations, and that would be the area of embedded leases. So pretty common in the healthcare space are these placed capital contracts where a vendor will give you a machine to use in a hospital setting, and your only requirement is to buy all of the supplies for that machine. And so within that healthcare organization, there were over 300 embedded lease contracts that had to be reviewed to determine whether or not that the asset that was included qualified for GASB 87 treatment. Additionally, for those contracts that were identified as true embedded leases, we then had the added exercise of performing the fair market value allocation that's required under the standard to determine the percentage of the payment each month that was applicable to the asset, so that we could capitalize the present value of those future payments related to that allocation. And then ultimately, getting all of those roped into the organization, and then building the sustainable day two process for their procurement people, so that as those came across their desk in the future, they were aware that this was an embedded contract, and that those were forwarded to finance and accounting to ensure that we capture these ongoing in a sustainable fashion into the future. One of the challenges that we had here was, again, a lack of resources and time frame to get all of this done. This is one where they actually leveraged RGP's Center of Excellence to perform all of the data collection for them. So once they had identified all their contracts, we worked through a remote exercise of data collection and getting the upload templates validated. And that ultimately gave them the bandwidth internally to meet the time frame. I think, the ultimate result was that we delivered on time. They were ready to go for the implementation. One of the unique challenges that they had was that the materiality that the healthcare organization maintained as in their standalone financial statements was different than the materiality of the rolled up consolidated county entity. And so what that meant was that they had more leases that had to flow into the healthcare standalone financial statements than those that would ultimately be consolidated up to the county. And so those differing materiality thresholds required a plan of attack and how the system was set up, but also created kind of a dual data collection plan where some leases were collected for the ultimate consolidated submission to the county, and then there was a second subset of leases that had to be abstracted for just the medicine or the healthcare organization's standalone reporting. So again, another example where making sure that you do thorough planning and scoping and understanding and materiality up front will go a long way in executing a successful data collection plan.
All right, here we go. What types of lease data do you plan to capture across your lessor and lessee portfolios? Long-term leases, short-term leases, immaterial leases, or all of the above? Again, by far, almost two-thirds, about 60% say all of the above, and then below that, just over a third say long-term leases. Almost nobody said short-term or immaterial leases. Is this that breakdown basically two-thirds all of the above and a third, roughly, saying long-term leases? Is that what you'd expect?
Yeah, I'm personally excited to see that folks are trying to capture all of the above. Right? As we mentioned before, let's gather everything we can up front, even if we think it's small or it's short term, just so we can show our work how we determined it if we ever get questioned. Because there's all other types of leases, right? We're not talking about leases that have variable payments, embedded versus real estate versus equipment and all that kind of stuff. But I'm excited you're trying to capture everything. It's definitely leading practice up front, just in case we ever need anything. And just because we think it's short-term or it may be initially short-term, if there's any possibility of it being something else, we probably ought to track it. Tim, any feedback on this?
Yeah, I would say that, I think that I'm good to seeing that everybody is going to at least track all of the above. I think what you'll find out is that with platforms, lease accounting platforms, there's a cost associated with putting everything in their platform. And it's not only just the cost to the software, but also the cost administratively. So if you're putting it into a platform and you're gonna track it in the system, you're also agreeing that you're gonna track that lease through the life of its lease. And that's going to take manpower in the organization. And so, a lot of times what we see is that people, gather everything together and then they make a scoping exercise to determine what do they actually want to put into the software and manage through the software. That doesn't mean that it's not important to know the short-term or the immaterial lease component, because there's a disclosure requirement for at least the short-term. And then your auditors are going to be very keen to know what you excluded from an immaterial perspective. I think the challenge is finding the right mix and balance to what you want to do administratively, and then what you can maybe manage outside the platform and still meet the requirements of the organization. But it's all good, and it's something that every organization is going to be a little bit different in what they determine. And I think ultimately having everything in one spot is probably the best case. I just see that a lot of organizations find that comes with a cost.
Yeah, definitely. So let's just kind of start to wrap up here. And I want to accentuate, though, why you need a process, and it's implicit in this question, to manage ongoing accuracy and include any changes and so forth to maintain that portfolio. Because as we said before, it's a new journey. It's not just a one-time event. So a Big Four study showed that 70% of leases change in a significant enough way in the span of just 12 months where we must monitor them. So there's all kinds of things that we need to look out for in perpetuity, and that includes kind of ongoing data collection. Are there leasehold improvements? Do I have an impairment that I need to account for? Are there new leases coming up and so forth? So we have to have a new process. Tim has been using, and I see some of the questions to start addressing them. Someone asked, what is an upload template? The upload template assumes that the software can absorb things in bulk, right? So you definitely, if you're going with software, you want something where you can take an upload template and load things in on mass to get you going in perpetuity. But we've got to have that process set up. So let me circle back to the three things, and I'll jump right into the Q&A. So the three things to remember, again, are timing. So when is your year end? How many years of look back do you need to do? 2 is completeness. Let's be sure we're capturing everything per that last polling question. We want to capture everything up front. As Tim said, even the short-term leases aren't technically GASB 87. There's a disclosure requirement there. And then finally, we have to have a way to sustain compliance, which is the last item. So I already addressed the upload templates question. Let me hit a few more, and then I'll pass it over to Tim. A great question someone asked is, how is GASB 87 different from ASC 842? Perhaps you're an accountant that was in an organization doing 842. Well, in GASB 87, there's no concept, for example, of operating leases. It is quite different. There's requirements. So in some ways, great. Okay, I don't have to deal with operating leases, but they have to do the look back. So finance leases behave in a pretty similar way, some terminology, and there are some other changes. Somebody else asked, are there certain organizations of certain size that wouldn't be subject to this? The answer is no. Tim and I have both engaged with very small organizations. It's really about how much you lease, how much of an administrative burden is it for you to now start doing this in a centralized way, and because you're going to have to disclose this. Tim, any questions that you'd like to hit here before we run out of time?
I did see one, a few that were referring to GASB 96, and we haven't forgot about GASB 96. GASB 96 is about subscription-based IT agreements, or SPIDAs for short. Essentially, the exercise for data collection for GASB 96 is exactly the same as the exercise for data collection for GASB 87. GASB 96 has about a six-month or maybe a year delay behind GASB 87, but we do encourage organizations that if you're going through this very rigorous exercise of data collection, you might as well expand it to include GASB 96 and to pull in all those subscription-based IT agreements that will ultimately follow the same basic construct for accounting, such that you'll have a liability and an asset on the books for those subscription-based IT agreements that will be amortized over time. So that's a good point to point out. I have also seen a few as it relates to materiality, and I know you alluded to that there is no size requirement to who this is applicable to. Anybody that produces financial statements under GASB, generally accepted accounting principles, then you will be required to follow this standard. Materiality, as you can imagine, is a nebulous construct. It does differ from organization to organization, but it is an allowed kind of principle to apply here. The one thing that I will say with leases and GASB 87 specifically is the way that you define materiality is different than what you would traditionally see in a capital asset space. You're not necessarily worried so much about the value of the asset as you are the value of the additional liability that you'll be creating or potentially putting on the books. What that means is that a low dollar asset with that maybe you're leasing for 30 years could be material to the liability. And so in this case, you're actually looking at, what is the value of the payments that are being made, and then ultimately determining the materiality threshold based upon the size of the overall liability that you're placing on the books, and what it would take to ultimately move that number materially to determine what your materiality threshold is. So it usually does relate, ultimately equate to a materiality threshold much higher than what you would see on your capital asset side. So that's one that you definitely need to have a discussion with your partners or auditors about, but there is generally some flexibility in that, and it may help you to potentially scope out leases that you don't necessarily want to spend a lot of time and money chasing after the adoption through the administration process.
All right. We've run a little bit over time, so we're going to have to wrap it up there. But I appreciate both Andrew and Tim. Great presentation, lots of great information. I want to thank you both for that, and I want to thank everyone in the audience for joining us today. We hope to see you at a future webinar.